High Street School Uniforms, a small retail business selling a range of uniforms for students at nearby schools, has 2 stores in Balwyn and Richmond. So the building in Balwyn was bought in 2010 for $470,000, while the Richmond building was bought in 2003 for $250,000. So both businesses came with a cost price of Balwyn's is $470,000, Richmond's is $250,000. What happens over time is that these have been listed at their original purchase prices in the balance sheet. So Balwyn, the balance sheet will show building at $470,000, and Richmond, the balance sheet will show a building of $250,000 as an asset. What's happened now is that the owner has decided to revalue the buildings, and based on his research, he thinks that the current market value of the Balwyn property has actually changed to $420,000, and the Richmond property is now $540,000. So should the buildings be revalued to their current market values? So in that case, what we do with the Balwyn property is change it from $470,000 to $420,000 in the balance sheet. And for Richmond, we change it from $250,000 to $540,000. So we can see with the Balwyn property, we've actually made a loss of $50,000. And with the Richmond property, we've actually made a gain of $290,000. So what we're going to do is figure out should or should we not revalue these buildings to their current market values. The different accounting principles will say different things. There's no right answer here. In the real world, different things happen for different reasons. In both instances, we do sometimes revalue things, other businesses don't. So what we're going to look for is an argument either for or against, and we're going to use the historical cost principle and the conservatism principle. So the first thing we're asked to do is explain the value at which each building should be valued. So how do we explain something? I for identify, and by that we mean we're going to identify an accounting principle to apply to this case. D for define, we're going to define that accounting principle. And the last thing we'll do is R for relate. We'll relate this accounting principle to the case study we've been given. So explain the value at which each building should be valued in the balance sheet according to the historical cost principle. So question 1a is asking us about the historical cost principle. So based on that, we do have current market values, but we're talking about the historical cost principle. So should we change these values or not? Well, the first thing we're going to need to do is remember what is the historical cost principle. The definition is all transactions should be recorded at their original cost or purchase price in the firm's accounting reports. So based on that situation, we actually wouldn't revalue either of these properties to their current market value. Balwyn shouldn't be $420,000 and Richmond shouldn't be $540,000. They should go back to what they were bought at originally in 2010 for Balwyn and 2003 for Richmond. So how are we going to write this down for 3 marks? We're first of all going to I for identify an accounting principle. The problem here with this question is we actually don't need to do that because the question's already done for us. So just by writing historical cost, we're not going to get a mark at all for this question. So what we're going to have to do is forget about identifying. The question's done it for us. Let's just get into the definition. And let's get it down into a nice neat summary we can put in. All transactions must be recorded at their original cost or purchase price. So what we need to do now is relate that to this question. So in this case, we're going to say Balwyn must be valued at its 2010 purchase price of $470,000 and Richmond must be valued at its 2003 purchase price of $250,000. So the R for relate basically means you need to answer the question. You're asked how each building should be valued, so we need to see a number there. So we can see Balwyn $470,000, Richmond $250,000. Let's look at the marks for this. We'll have 1 mark for defining the historical cost principle. As we said, there's no mark for identifying here because the question's done it for us. We'll have a 2nd mark for applying this principle correctly to the Balwyn property, and a 3rd mark for applying it to the Richmond property.